Joining us with the latest on what's moving Wall Street, as things are pretty positive overall today. John Bever, president of Phase 3 Advisory Services, registered principal with Royal Alliance Associates based in Buffalo Grove. John, what do you make of what you're seeing here on a positive day so far?
It is a positive day, but I think this is going to be kind of like construction in Chicago in the summertime. So what's happened is they've shut down some lanes, but it's been nighttime, so there hasn't been much traffic, no problem. There's been little resistance for the market to advance, even today. But as we get into the morning rush, I think we're going to see these fits and starts. So again, today is good. We had global markets up this morning. We got a 3.5 to 1 advance decline right now. The Bank of Japan affirmed its unlimited QE. That's always a nice thing for the markets to hear that unlimited QE. And COVID-19 cases are decelerating. Even though we've got oil on the front month down once again, we've got some positive movement. Friday was a good day as the market closed above its 50-day moving average. Finally, we've been fighting against that for a couple of days. Finally, second day in a row, we got through that. So right now there is a positive mood.
So let's talk about what we have this week. We got a lot of earnings news, and I'm imagining not much of that's going to be good.
Probably not, but I think the market is even looking beyond this. We're all expecting bad earnings. Companies are pulling guidance. Really what's happening is investors are trying to look beyond this quarter and looking to second quarter and getting a feel for what's going to be happening in the second quarter. So I think that this quarter is a push. Probably not much is going to be a surprise. If there is a big surprise, obviously going to push a stock one way or the other. But I think we're almost going to consider this earnings season, this particular quarter, as a non-event. We do have resistance, though, on the S&P at 2930, and that's pretty close. So we could have a stalling of the market as we get up to that level, and that could coincide with some of these earnings reports. As really not much is going to be a major move. We do have big tech reporting quite a bit this week. We got some interesting things going on with Boeing this week, GM suspending its dividends and share buyback. But all of this, the market seems to be digesting for right now.
Is what's really important unemployment, actually getting people back to work so they have money to spend?
That is it. That is the real issue. So, example, Hertz used car prices down about 12%. Why? Because there's just no demand there. People aren't out buying. If they get back to work and they can get those paychecks, we'll get the economy moving again. But again, it's going to be like construction in the summertime during rush hour. It's going to be fits and starts, stop and go, and it's not going to be smooth. So it is this question. When will we reopen? We're starting to, and at the end of this week. How? Not sure. We're going to figure this out as we go. What's the consumer going to do? That is the real question, and it's affecting earnings in a big way.
And that's just the whole economy. I mean, it's not all consumer-driven, but so much of it is.
70%. It is a big piece. So what's an investor to do? I think that it's very important to define your strategy, especially right now. When the market's just coasting along, it's easy to forget about what your strategy is, but in times like this, it's critical. Think about three things. If the market sells off just a little bit, what are you going to do? If the market sells off big, what are you going to do? If the market continues to rally, what are you going to do? Lock those down so that you are ready to act when the market shows its hand, and it will over time. My opinion, I think we're getting close to a temporary top, probably a retest. Are we going to go back down to the absolute lows? Don't know, but I would expect a pullback sometime to bottom in May to maybe August, so it could be a rough summer. But these should be good buying opportunities because we will get through this coronavirus.
Always good analysis from John Bever, president of Phase 3 Advisory Services.